Good afternoon, everyone, and welcome to the VectorVest YouTube live stream. My name is Glenn Tompkins. Good Gordon, Jen. I'm looking at all of the people chatting in the room. Big time. Thank you all for showing out. Big time. Holy smokes, Joey. We got a lot of folks in here, don't we? We do. Man, say hi to Joey. Joey, this is Joey. This is everybody. Everybody sitting to my right side is Joey. He's my producer. Say hi, Joey.
Hi.
There you go. Richard from Jamaica. Now, Ricardo from Jamaica. Now, wow, the names just keep popping up. Again, thank you so much for coming out to support the YouTube live stream. What is this all about? This is Trending Thursday. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. It's always my pleasure to host these sessions here where we look at what stocks are trending in the market, and then we use the VectorVest software to give us a better gauge as to if they're good stocks, bad stocks, are there stocks to look at, to watch, or stocks to get into now. There's a lot of different things to look at, but we do use the power of the VectorVest software to analyze the stocks. If you're not a subscriber to the software, Joey's going to put a link in there for you to sign up for a trial. From the trial, you can try this out for 30 days. If you like it, you keep it. If you don't, you don't. But for all of those people who are not subscribers, we will open up the doors to give you a trial, number one. Number two, if you're new and you haven't subscribed to our channel yet, please do so. Right below the video that you're looking at right now, you're going to see a big red subscribe button. If your subscribe button is not red, don't click it. You're going to unsubscribe. So if your button below the screen is red that says subscribe, click on it, subscribe, and then you'll probably see a little bell icon. Click on it as well to be alerted to all of the upcoming videos that we're going to be doing. All right, so comment, like, but big thing, subscribe. We just recently hit the threshold of 10,000 subscribers, and man, you guys are still popping this. This is hopping and popping. We're going to keep it going. Right. So let's get right into it. We got a lot of people. Let's get right into it. The first thing that we always do when it comes down to these Trending Thursdays is we keep an eye on what's going on in the market. If you don't know, VectorVest times the market. Now, before you step up and say that, wait, you can't time the market, there's a difference between timing the market to predict where the market is going to go, which we don't do, or timing the market to stay on the right side of the trend of the market, which we do. I can't say that. Can I say that, Joey?
You can't say do-do.
I can't say do-do? All right. That's what we do. All right, we do try and time the market by staying on the right side of the trend of the market. So, tell you what we're going to do. We're going to start off with the home page of the VectorVest software. This is what happens when you open up to the home page. This is what it looks like, and from this, you're going to be able to glean a lot of great information as to what's going on in the market. Let's start off with our traffic light, our daily traffic light into the market. Right now, the color guard is mildly bullish because we're one tick into the green. Just like a traffic light, green means go. The stronger it's in the green, the faster you can go. In this case, go means buy stocks long. The yellow means slow down. Just like when you get to a yellow light, you're supposed to slow down. I'm from Brooklyn, New York. Forget about it. We don't slow down. We speed up before it turns red. So, but in the real market scenario, when you see a lot of yellow or the market timing gauge in the yellow, slow down. And of course, when our daily traffic light into the market is in the red, that's not a good time to be buying stocks. If you look over here on our quick list, you can see what all of the major indices are doing. The Dow is nicely up today, about 1%. The NASDAQ is up about 0.8%. The S&P is up over 1%. And our VectorVest composite, for those of you who are new, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we track 8,184 stocks. So when we say we time the market, we're timing the move of over 8,100 stocks up, whether it's going up or going down. We feel that it's a better representation of the broad market movement. Whereas you look at the Dow, tracks 30 stocks, but we use it to say that the market is up. The S&P tracks 500 or 100 stocks. We use that as a gauge to say that the market's moving up. Now, the NASDAQ, on the other hand, tracks about 4,300 stocks, but they are tech-heavy stocks, so it's very heavily weighted on the tech side. But when it's moving, we say the market is up. We feel that using the VectorVest composite gives us a better feel of the market because this indicator tracks over 8,100 stocks. Now, if we move over, we see our color guard, and our color guard looks at 3 of our market timing indicators. Price, which is that price movement of the VectorVest composite. Today it's green. Now this is a 6-day snapshot of a traffic light. This will change on a day-over-day basis, but this gives us a nice broader view of what's really going on in the market over the last 6 trading days. We track the price of that VectorVest composite on both the week-over-week and day-over-day basis. The RT looks at what we call the short-term price trend of the market. RT stands for relative timing, and this is one of our core proprietary indicators, and it's cast on a scale between 0 and 2. When RT is above the value of 1, it's favorable because the market's in an uptrend. When it's below the value of 1, as it is right now at 0.84, the market is still in a downtrend, but over the last 6 trading days, this indicator is growing in strength. We're almost to a point where we can call the market in an uptrend, but not quite yet. And the last indicator is the BSR, or buy to sell ratio. Every stock in our database gets a buy, sell, or hold recommendation every day. To get the buy to sell ratio information, which is at 0.09, we definitely have more sells in the system than buys. Because of that, the buy to sell ratio is extremely low. The market is showing a lot of signs of weakness. But as this indicator grows as well, the market will start showing more signs of strength, and everything will be right as rain, as the Oracle says in the Matrix. I'm a big Matrix fan. So if I'm looking at the color guard over the last 6 trading days, what's the main color I see? Yellow. With that, what do? We're going to be a little bit more cautious, but does this mean we can buy stocks? Yes, because we have a green light in the color guard pricing column, which means that the price of the VectorVest composite has risen on a week-over-week and day-over-day basis. There is some confirmation to the up move on a day-over-day and week-over-week basis to say that we have a green light and it's okay to start buying stocks now. Do you back the truck up? No. All right, you don't back the truck up. But this is a good time to start dipping your toe into the water. And we're going to take a look at some stocks that are possibilities to take a look at. Now, with all of that being said, what makes the market move? Well, there's 3 things that move markets globally: earnings, interest, and inflation. All right? Earnings. When earnings are up, companies are making money, they can pay their employees more, they can buy more product and things of that nature, invest in R&D. So that's the good thing. Earnings is always the good thing, but inflation and interest rates are the bad thing. In an ideal situation, in a Goldilocks good situation in the market, you want earnings to be up, interest and inflation to be down. Why? Because if interest rates are high, people have to pay back more higher money on percentage on interest when they go to borrow money. And inflation high means that things cost more money. So in an ideal situation, you want earnings to be up, interest and inflation to be down. So our first stories always center around what the Fed is doing, what's making the market what it is. Keep in mind, there is a difference between the market and the economy. Now, because of what's going on in the market and because of COVID-19, right now the market and the economy have sort of kind of melded together, which is not a normal thing, but this whole thing is full of uncertainty. Keep that in mind. So they are 2 separate entities, but because of COVID-19, the market is being affected by the economy, or the market is affecting the economy. And right now, the Fed has opened up the spigots to be able to do everything that it can to keep the economy going. So let's get into our first story.
Hey, before we do that,
oh, what am I missing?
What those 2 asterisks mean in the color guard?
Our question is, what do the 2 asterisks mean in the color guard? So not only do we have a green light that went up on both a day-over-day and week-over-week basis, from a market timing standpoint, when you put your mouse on it, this market timing call has been confirmed by a different market timing signal called the RT Kicker Combo Timing Signal. For those of you who have never used the VectorVest software, when we talk about timing the market, we have seven market timing signals to be used no matter what type of investor you are. If you are a really conservative investor, we have the confirm call. All the way to the most aggressive investor, we have the primary wave, and then we have calls in between to affect If you're a swing trader, we have the DEW, we have the green light buyer. There's a lot of different timing signals that can be used depending on how you invest in the market. But the asterisk means that it was a green light confirmed by one of our market timing signals. All right? So let's get into the first story. And again, my first stories always tend to look at what things are moving the economy. Fed minutes reveal alarm over coronavirus disruptions to economy. Officials cut interest rates at 2 unscheduled March meetings and launched open-ended bond purchases. So what's happening is they're trying to put more money into the economy by buying the bonds. All right, and that is a way of quantitative easing. It's however you want to look at it. It's a stimulus package that the Fed is utilizing. They have a lot of tools at their disposal to help to bolster the economy. And buying, open-ended bonds or just bonds in general, as they buy them, and it goes into the trough, the money trough. And actually, as long as we keep printing money, we got a trough of money, that's for sure. So, alarm over the coronavirus disruptions to the economy. What do you?
To the story.
It's not changed to the story? Oh, I knew that. Thank you, Joey. Joey was telling me to change to the story. All right. So that's one story in regards to what the Fed is trying to do, but they have some concerns. The next one, the Wall Street Journal survey, coronavirus to cause deep U.S. contraction, 13% unemployment. Guess what? With the numbers that came out on unemployment today, we're pretty much sitting at, 16 million people? 16 million people now unemployed. The number came out this week, I think, at 6%, 6 million new people signing up for unemployment. Folks, this is heavy stuff. There's a lot of people who are out of work, and that number could keep going up as long as we are in the social distancing mode. But keep this in mind, without me throwing any politics in here, think about it. If we didn't have the social distancing, the COVID-19 could be running rampant throughout the country. Think about that. All right, just think about that. It could be running rampant. So I know a lot of people are out of work. A lot of people are sitting at home, working from home. But I think overall, this becomes my opinion. I think what it's doing is it's helping to make sure that the hospitals are able to handle the flow of people who are coming in and out. All you guys that are in New York, please be careful. It looks like that is the epicenter of the growing amount of cases in the United States. My parents actually live in New York, but they live upstate, further upstate. They live in Peekskill, so it's not in the New York City proper area. So I'm hoping that they're okay. But all of you who live in New York, just be careful. All right, so that's talking about unemployment. And then part of the stimulus package, the $2 trillion stimulus package, was for the Small Business Association to start giving out loans to these companies that could be going out of business. Look at it this way. When this is all done and said, we're going to see a new United States. Think about that. A lot of companies will go out of business. That is an unfortunate reality of all of this. And the $2 trillion package that was put out, it's moving slow. It's, everybody who files taxes is supposed to get back $1,200 per person, $500 per kid. I don't know of anybody on my own personal circle who have received any money yet. And they keep saying it's coming, it's coming. But when people got to pay bills, when you have to go to your creditor and say, well, I'm waiting for this money, it's coming, they ain't trying to hear that. But I will step up and say that a lot of people, a lot of creditors are giving some leeway, and I think that no matter what happens in life, when bad things happen, Americans will be Americans. And we always tend to pull together when we need to. All right, so that's just a side note on my part. But the Small Business Association is under fire for failing to get aid to struggling small businesses. This is part of what the package was all about, to get those loans out to the small businesses. But if they're not getting the loans, they can't pay people. They can't pay for people's insurance, all of those things. So this story talks about the Small Business Association being under fire for not getting that stuff out. So all of these things tie into what's going into the market. So let's go look at my watch list today. I'm going to open up the software and go here. Take you good. You're there. Let's go to the viewers tab. And I'm going to go to the watch list viewer. And every week we create a watch list of stocks that we talk about. Today is going to be 4/9/2020. All right, here's the stocks that we are going to talk about. And the two that we look at for the market are the VectorVest composite, which is our indicator that we use for timing the market. And for those of you who are not subscribers, let's look at the spiders, the S&P 500 spiders, SPY. First thing I'm going to do is I'm just going to pull up the graphs. So I have them both highlighted in my list of 14 stocks that we're going to talk about today. I'm going to right-click, view the stock graph. Here's the market. Now here's the VectorVest composite. I'm going to put this on a 3-month graph. Here's the VectorVest composite, which is looking at the movement of over 8,100 stocks. Perceived bottom right here on March 23rd of 2020. And I want to show you something from the standpoint, let's do this. From the standpoint of saying, all right, you guys didn't call out a bottom, but you know, how does VectorVest work to get me into the market at the right time? All right, and now my page will blow up real quick. How many people consider themselves to be a more aggressive traders? Type a me in the room. Tell me when they start coming in, Joey. How many of you consider yourselves to be a more aggressive trader in the market? Type a me in the room. All right, nobody's typing me. It must be either a delay or they're not listening. There they are. So for those of you who are more aggressive traders in the market, remember I told you one of our market timing calls was for the more aggressive trader? I'm going to put that market timing call on. It is called the primary wave, which looks at the week-over-week movement of that VectorVest composite. Is the fastest signal we have. Notice that we had the bottom on March 23rd, possibly the bottom on March 23rd because the market is still now rising off of that bottom. Notice that that call issued an up call 2 days off of the bottom. Folks, I don't know who else out there has got that kind of information to get you in that fast off a market bottom. Now, if you're not that fast or that aggressive a trader, I'm going to put on just a tad bit slower indicator called the green light buyer. That looks for the green lights in that color guard pricing column like we had today. Every time you get a green light, it will issue a call. I'm going to put the green light buyer on. That issued a call the next day on March 26th. Folks, with our market timing, in case anybody tells you you can't time the market, with our market timing, we got the most aggressive people in the market 2 days, 3 days off of a perceived bottom, if that is the bottom. Now, if you're a little bit more prudent investor, I'm going to put on another call. It is called the DEW. It's our technical timing call. Let's put that on. That just issued a call a couple of days ago, which was 4-6. And is that a good call to start as the market rises? So no matter how aggressive or conservative or prudent you are, market timing does work and the market can be timed. So for any of you who are sitting out there and saying that you can't do it, I'm showing it to you right now. And right now, if you're a little bit more prudent, you got an up call. 4/6/2020, look at that call. On this graph, I have a 20-day exponential moving average, I believe. And yes, I've got a 20-day exponential moving average. That call happened just before the price, even if you don't believe in market timing. Here's the 20-day exponential moving average on the VectorVest composite. Last couple of days, it's above and still moving. So off of this bottom, if you're aggressive, we gave you 2 market timing calls. Off of this bottom, if you're more prudent, we have a market timing call. There it is in a nutshell. So for any of you who have not taken a trial of the software, this in and of itself should be a proving mechanism to tell you that we know what we're doing. We've been doing this over 30 years, all right? So that's looking at the VectorVest composite. I wanted to show you that from this perceived bottom, again, on March 23rd, when the VectorVest software started getting our subscribers back into the market, I've already done several conversations on when we got you out of the market. We got you out of the market round about the 224 time period. Look at that. That DEW call also gave a down call. So we help you both on the upside and the downside. As that down call happened, would that have been a great opportunity to get out of the market prior to all of this? For any of you who are not subscribers, this is how the software works. we will help our customers get in and out of the market at the right time. The next indicator we're going to look at is the spiders. Same kind of scenario. Remember, the spiders track 500 stocks. Our indicator, the VVC, tracks over 8,100 stocks, but look at the S&P 500 starting to move up as well. So that's where we're going to start off, looking at what's going on in the market, the indicators you can use for a market timing call to get in at the right time, and that's what it's all about. And even these calls that we gave on the VectorVest composite was earlier than anybody out there was giving you the upside or the hindsight, you call it hindsight, giving you the insight as to start to play the market. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.